Okay, so let me see. Okay, the time now is 2 p.m., right? So welcome once again, everybody, to a new episode of Meet the VC series. So for those who are new, it's part of the E27 webinars. So the purpose of this series is actually to bring us a step closer to the region's prominent and active VCs, so that we have a better understanding of how each and every one of them approach and evaluate a potential investment opportunity, right? And for those who are unfamiliar as well, so this series is actually brought to you by E27 Pro membership. Right, so with this program, you're actually able to tap into our network of over 250 active investors for your fundraising purpose, or maybe just to expand your connections. So far, we have successfully connected over 900 successful connections between startups and their investors of their choice. Right, and on top of that, you'll also be getting the pulse of the ecosystem through our curated articles from over 150 news sources. You also get a chance to showcase a company and get priority listing. And this is especially beneficial for companies who are new to ecosystem, because this is the way to put you guys on the radar of the ecosystem stakeholders, right? And last but not least, also recently we have made the official launch of perks, where you actually get access to over $10,000 in cost saving through our partners' credits, offers, and discounts. Right, so there are values to be realized for all companies out there. So do feel free to check it out and reach out to us if you have any questions. Okay, so back to today's session, now that we're all on the same page. So today we are pleased to have with us Dave, which is the principal partner from Incubate Fund, right? So Dave, you want to say a quick hello to everyone?
Hi everyone, I'm Dave, I'm principal Incubate Fund. So very happy to be in this session to share with everyone whatever thoughts you have on your head, and also to share a bit more about Incubate Fund and what we are doing.
Great. Yeah, thanks for being here with us, Dave. So everyone, please note that also the session is going to be recorded, and we'll be sharing the article and also the video on the site. So do check them out so that we don't miss out on any of the important points that Dave is going to be sharing during the session. Okay, so Dave, we had a quick chat yesterday as well, right?
Yes.
So I think before we get to know Incubate Fund, let's hear a little bit about you, right? So maybe you can share with us a bit on your background and how do you get started, working with startups through Incubate Fund.
Okay, I think my background is probably a bit long, but after university, I was in a corporate corporate finance doing M&A on the buy side in commodities. Then after that, I went to the sell side, which is a corporate advisory. And during the time there, actually, I worked with many different companies in Singapore and in the region, advising them on valuation, on M&A matters, and corporate finance matters in general. But one of the things that I think I really like doing, right, while I'm in M&A, while I was in finance, is because for me, it's more about using my skill sets to help people. And I don't think that, at a point in time, I knew about venture capital that much, because naturally for someone doing advisory, it's okay, you go to PE and things like that. So, but I was also on the side helping some of my friends who are doing startups with their financial models and things like that, free of charge, because this is my skill set, right, at work, and they are my friends. So then just nice, there was this one recruiter that came and said, hey, there's this firm hiring. And I was like, okay, sure, I can talk to them. And, after a bit of talk and things like that, I realized that, this is actually what I've been doing a lot, because I've been always trying to help people with finance, with my finance knowledge. So also, one of the reasons why Incubate liked me or saw me as a good fit was because I had some gaming background. I started working at 14 actually, so before university. I was that time pretty much a huge gamer, and I was in the gaming industry quite a fair bit. I spent up all the way before until I was 19 years old, 14 or 19. I worked for many big gaming companies like Electronic Arts, Microsoft, Sony, and I also was one of the pioneer in one of these gaming publication in Singapore that was in circulation for 10 years. And I also started a gaming community in Singapore called SG Gamers with a few of my friends. That was in 2005, 2006. So at that point in time, Incubate Fund, we are actually a very heavy, have a lot of investments in mobile gaming companies in Japan. So then they thought that I'm a good fit. So that's how I got hired. Yeah.
Okay, okay, interesting. Yeah, actually, truth be told, I was listening to one of the podcasts. I think you were the guest because a year, I think about 3 years back,
Oh,
2017.
oh
Yeah, I
wow.
think yeah, it was a 5 year series or 5 year period or something. Do you remember?
Mm. Sorry,
Yeah,
which one?
yeah.
Sorry. The
Uh,
5 years one?
yeah, 5 years period or something. I think the title was about your advice to millennials, who want to start a business. I think the title was "Don't think too much and just try." Yeah, but I think that was
Yeah.
yeah. But I think it was
Yeah,
your
yeah.
early days incubate fund lah, early days. Okay.
Yes. Mm.
Yeah, tell us a little bit about Incubate Fund. Maybe you can, share about the history of the fund, right, the originality, and also dive a little bit deeper on the fund's investment philosophy.
Okay, so Incubate Fund, right? We are actually a Japan headquarter seed to pre-seed focus VC fund. We started in 2010. So we four general partners in Incubate Fund, which is the four co-founders. They came together individually. Actually, all of them have been career VCs.
Mm,
So they have been in industry for like, at that point in time when they started, like 10 to 15 years, 20 years in the industry actually, in a Japan VC startup ecosystem. So then they came together and they started Incubate Fund. I think they're very passionate at helping investing into like seed stage company and pre-seed company. So we
right.
have grown a lot since then. We actually right now we are on our fifth flagship fund in Japan, and we also have an office in Singapore. So we actually have investments in Southeast Asia. We have some direct investment in Southeast Asia, and some we've done through our sister fund, which is KK Fund. And we also have Incubate Fund India and Incubate Fund US. So what all these funds share in common is that we are all very much focused on seed company and pre-seed companies, investing in the earliest stage of the company. That's where we are at. And all the funds like India Fund, US Fund, they're all run independently by their own GP. So
Okay.
where I'm at right now is that I'm actually sitting in the HQ, which is with Incubate Fund Japan, but also coordinating any activities that we have outside of Japan, and also taking care of our portfolio companies in Southeast Asia.
Okay. Okay. Interesting. So what would you say is that factors that set Incubate Fund apart from other VCs in the region?
Sorry, I think my earpiece is running low on battery. I'm sorry. Let me just switch to my speaker.
Okay.
Yeah. Hello?
Hi, can you hear me?
Yes, I can hear you. I'm so sorry.
No worries.
What set us as different, right, is that actually
Mhm.
we are very focused on early stage. So we always want to be the first VC in. So I think this is something that make us very unique, right? Is that we are very hands-on to extent whereby we are not over invasive, but then our
Right.
GP, after we invest in portfolio companies, right, we make it a point to actually always follow up and talk to the founders.
Right.
We have a weekly meeting actually with our founders, very
Right.
casual. So the meeting, like talk about what's going on and things like that, because we found that actually with weekly meeting is more effective. You can have very short agenda, like, okay, this is something that we are facing, then, okay, what is the solution? Why don't we try to work on it to see whether it works out? Next week we have a result, then we can move on. If not, then is this a bigger issue, or is this something that take longer to solve? So this is something that that's very unique to us. So the GP in Incubate Fund, we all of us actually spend most of our time doing portfolio management.
Right.
So we talk to our portfolio a lot because they are very early stage. So and another thing that set us aside is that actually for us, if we are always trying to think of the idea first and the thesis first before we invest. So usually when I tell you, right, okay, we have something we want to look for, I already have very like a structured idea on what kind of business model I'm looking to invest. Or
Okay.
yeah, if there is so it's very much a lot easier for us to look for startups, right? In that way, because you already sort of know that, okay, this is roughly what we are looking for, and this is what what kind of problem we are looking to solve. Instead of waiting for founders come to us and say that, oh, we're trying to do this, we usually already have an idea. So we are also, because of this, it also make us a better, we also spend a lot of our time doing research, and we are also much better in terms of knowledge in the industry. So when let's say we are looking into like a specific industry to invest, we already have sort of a formal idea on the industry structure and things like that. And then when the founders kind of talk to us, it's actually more fruitful than, when they kind of talk to us and say, oh, we don't really know what's going on, so let's go find out, right? And that is very helpful for a seed stage VC also, because if there's no one doing it, so one is that if there's no one doing it, we can find someone to do it. If there's someone doing it, then at least we know what we are looking for. It's much better, easier for us to look the whole universe for the best startup in what they're doing, right? So because for early stage VC, speed is paramount. It's the most important.
Okay. So you mentioned about the focus on the funding stages is early stage startups. And on the sector-wise, but are you guys flexible in terms of if there is serious Incubate, you open the door to that as well?
So sorry, I missed you on some of the part. I think the voice fade out. Yeah.
Right. No worries. So you mentioned that you focus on early companies, right? What about sectors or industry? Is there a favorite sector industry that firm you focus on?
Yes. So actually very geographic driven. So every different geography, we have a different kind of sector that we focus on. Very different industries that we focus on. So I'll give you an example, right? Like for Japan, we have already moved a bit more away from consumer startups and away and more towards deep tech and digital transformation startups. So because the economy has moved and innovation has taken one step further up, right? So it's like maybe 3-4 years ago, maybe like early 2010s, Tokopedia is the only one, right? Or they are the earliest, right? And they can take the market, right? As a startup that is executing well in what they are doing, right? But right now, if let's say you want to start a new Tokopedia, it's probably really hard. So this is what is going on, right? The cycle, right? So in Japan, we have already moved on to look at more deep tech companies like space tech, actually. So in Japan, we actually invested in some space tech companies because in our own research is that actually Japan also have JAXA. So the Japan NASA and JAXA actually also have a huge budget for space, for space exploration and space related stuff for their national interest, right? For Japan national interest. So, but the thing is that we realize, how come most of the innovation, right, in space tech, right, it's actually coming up from US, even though Japan actually has the capacity to support, space related industries. So actually, we were one of the first mover in the industry, in the sense that we are one of the first VC that actually, look into space tech, invest into space tech, and we invested into this company called iSpace, which raised the largest Series A after we invested. They raised the largest Series A in Japan. So their Series A after us was around 90 million. They raised 90 million. So then that actually gives a lot of credential to the industry, right? So which is also very important to us. Also things like with our fifth fund, we are looking at deep tech, digital transformation, and public sector innovation. So these are kind of things that we are looking at. Also, for India, of course, we won't be looking at something like space tech company, right? So it's very different with India, because where they are at economically and in their ecosystem, right? The cycle is probably like 10-15 years behind Japan. So then we will look at companies that actually solve more basic problems in India. So recently we invested, I think it was announced in Incubate Fund in India, invested in this company called Captain Fresh. So they do, how do you say,
they do the supply chain. They solve problems in the supply chain for fish for aquaculture or for fish and things like that, because India is pretty much a lot of supply chain problems, and it's still very much, there's a lot of area in the middle of India that is very far from sea and don't really have a lot of rivers and things like that. So seafood supply chain is pretty much a very huge problem, because it takes many days maybe to get there, or it's just too costly to bring the fish there. So Captain Fresh is a startup that is trying to solve that supply chain problem, right? And which is very much a very basic problem to solve in India. Whereas in Japan, if you go to Japan, this kind of startup would find it very hard to take food there, because they already have very well established seafood supply chain in Japan. And likewise for US, right? When we look at US, it's also very much B2B, but the things that we are looking for is very focused on enterprise. So enterprise startup and using more technology to solve deeper problems in enterprise, like cybersecurity and things like that. So really, I think really depends, our sector and industry depends on country to country. And it's very hard for me to share with you at once what every GP or every fund is thinking in terms of the exact business model they're looking for, or the exact industry they're looking for. So at this moment in time, but this is roughly, how we think about things, and it's very much very geographical segmented. Yeah.
Thanks for sharing that with us. So in terms of sectors and industry, you're quite flexible depending on the market, right? Depending on the strategy each of the fund is looking for. But what about funding stage? You mentioned that you focus on the early stage companies, right? So what would be the average investment ticket, right? And also your flexibility around it. Are you open to companies who are looking for investment Series A as well?
Yeah, so we are very, very focused on seed stage and pre-seed stage. To my knowledge, I think if let's say something that is probably nearer to Series A, because nowadays Series A definition is very wide, right? Yeah, everyone maybe this amount is Series A, that amount is Series A. So there's no proper definition of what a Series A is. But then what we look at is probably the stage of the company, right? Or how, what is the valuation of the company, right? Also, check size really, really depends. We do have a valuation cap internally. I don't think we can share it publicly, but of course we do have we are a very disciplined fund, so we do have a cap internally. And for check size wise, right, it really depends on the country once again, because for India, we can probably do 750 up to 750K maybe. And for US, of course, we have to go much larger. For US, we can for seed stage company we can fork up to 1 million. For Japan, right, because we are very much focused on deep tech company or digital transformation company, we require more upfront capital because they are very R&D driven. Then our check size for seed stage actually go up to 3 million.
Oh, okay.
Yeah. So approximately 3 million, yeah, which is about 300 million Japanese yen. Yeah. So it really depends on country. But for Southeast Asia previously, I think our cap was not cap, but our max ticket size is around 500K.
Oh, okay. Yeah, thanks for sharing that with us. But so with that in mind, right, how many investments you made so far? And according to the plan, how many more of these companies are you planning to invest with the current fund?
So, for Japan now, I think we just announced our first close for Fund 5. So we are actually always continuously investing. I don't think we have a fixed number that we invest. But maybe we see probably a year we see probably 10, 15. 10 to 15 startups we invest a year. In Japan, in India, we are moving at a very fast pace because right now, because of COVID situation, we see actually there's an opportunity for us to go in, to invest in some companies during this time when everyone has fear. So, so we actually are moving quite fast in India. they are, looking at so many deals right now. Announced wise, last 2 months, 3 months, like in India, we announced like 3. So, I think, I don't know how many more they're going to do. I haven't, gotten a chance to catch up on the pipeline. And US wise, a bit harder. Also affected by, because US is really hard for our team member to go out and meet people. That really affect a lot of things there. And it's not a very good situation to be in, but we are definitely looking every year across the region to at least 10, 20. It's no fixed number, but around that region. So every year we're definitely deploying because we always have raised the fund, to keep deploying.
Right. So let's do a check-in with your current portfolio company. So how are they doing, especially during this period? Right, and did you yourself witness any interesting research on this?
So actually, to be very honest, right, our portfolio companies haven't, suffered too much during the COVID period. I think one of the things that we as a VC, right, which was very helpful for us, as we mentioned earlier, is that we talk to our portfolio companies weekly. So we react faster, right? Sometimes I think founders, need someone outside to see a different perspective and to tell them, what's going on in the bigger market, because usually founders, tend to focus on what they're doing and they don't look at, what's going on in the bigger market, because they're just trying to build their position in the market, right? In their respective market. So we also have the perspective, right? Actually, for a very long time, is that our portfolio companies, we advise them to grow conservatively, not conservatively, but grow with an end goal in mind. You can't just grow at all costs. So we actually had a counter thesis of a lot of like blitz scaling and things like that. A bit antithesis. Not really that we don't encourage our startup portfolio to do that, but then we are always like, okay, you have to manage your burn. It's part of building a business, right? You have to manage your growth and your burn, right? So for us, perspective is that if you can survive another day, at least, then you have a chance, right, to raise money. But if you die now, no one is going to save you. So that's very helpful. So during COVID period, honestly, even we have startup in hospitality, they haven't suffered too much, and they actually raised funding during COVID. So we haven't seen actually any of our startups suffering this period, to be honest. Which is something I'm very, very grateful and happy about. So we had a Zoom call about our India portfolio founders, India portfolio founders. We gather one night and just do a Zoom call with everyone, because everyone is lonely, stuck at home. They want to talk to each other, right? So then we do breakout groups. And the funny thing is that everyone is like, this is a good chance for us to hire talents, because India is actually really, really expensive to hire good engineering talents. And they're like, oh yeah, this is actually a good chance for us to hire talent, because there are a lot of companies letting go of their engineers. So then, this is something that we of course definitely don't hope happen, like economical downturn and things like that. But then at least when things like this happen, our portfolio companies are just very different, right? They are not, oh shit, we need to cut costs. They are like, oh wow, it's a good opportunity for us to hire more talents now. So then this is something that actually we see across our portfolio in different region. In Japan, not much. Also, I mean, our portfolio companies are doing well, and actually a few of them actually announced fundraising rounds, as in they closed funding. So I think on the whole, our portfolio companies are very well positioned, thankfully.
Right. So I mean, that's great to hear, right, that your portfolio and they're still doing fine. So what would be your takeaway, or what would be your advice for founders, to hope and try
during the COVID period? My advice, right? It really depends on the stage of the company that they're doing, right? Of course, I think a lot of startups actually suffering, right? But then, to be very honest, if you look at it, I think somewhere they announced that the top richest people have became richer during this whole COVID situation, right? So what are the kind of opportunities they are exploiting, right? So it's something that we also have to also study and look at it. I would say that if you are a very, very early stage company, right? Or someone who's thinking to do a startup, right? Maybe this is actually a good time. A lot of good startups, right, are actually built out of financial crisis.
Okay.
Right? If you think about it, a lot of startups are actually built out of financial crisis. If you look at Airbnb, right? Airbnb was built around post 2008, around 2008, 2009, right? So Uber, all these are actually built in the wake of recession, after the Great Recession, right? So I always have the perspective is that when when there's a downturn and things like that, it's probably a very good time for you to evaluate a lot of options and to look at how you want to do your startup. There are my advice in general is not to be over aggressive,
Right.
and to monitor your situation, and don't be afraid to see if the timing is right or not and change accordingly. Because ultimately, I think timing is very important for founders. There are companies that actually start way earlier, right? Like Friendster, they started way, way earlier, right? So why can't it be a Facebook? So timing is very, very important for a founder. For later stage founders, for later stage startups, I would say that conserve your money, because this is a time whereby when the wave sweeps away a competitor, then and you are the surviving one, then you definitely have much more market share to maneuver post crisis if there are lesser competitors. Yeah.
Okay. Thanks for the advice, right? I think the last question from my end is that maybe you can share with me your thoughts on 2021. Right. It can be on the market sense, your primary market like India, Japan, and US. So what do you think is one impactful change that is 2021?
I would think that 2021, right? It's very, very hard to tell. I know that this is something that a lot of people have been asking, but honestly, right now, right, I don't have any idea on 2021. What, to be very honest, right? I don't know 2021 what will happen. But for sure, one thing is that I don't think lockdown and things like that will happen all the way. Vaccine or no vaccine, right? There will be a more opening of the market, and there will be things will go back to a certain extent.
Right.
But some things will not change, right? Like people can work. People understood how to work remotely now.
Right.
Like, okay, they know how to manage how to work remotely. Companies are opening up to the opportunity of letting their workers work remotely.
Great.
So the idea of a fixed office, right, it's pretty much during the last half a year or the past 1 year has been actually eroding. So then this is an opportunity for people to start thinking, hey, if I will do hiring, right, does it have to be, where I'm based in? Right. So you can actually gather talents in more places, right?
Right.
And also what I'm thinking quite contrarian, right? Is that consumer demand will not rebound as fast. Of course, you see like people saying, oh, consumer demand has rebounded, but because government is printing money, right? A lot of government all around the world has been printing money. How long can this go on? So I have a very, very interesting, someone told me, right? Kind of funny actually, I think about it. Someone told me that like the governments all around the world are getting used to saying that deficits are okay. So if deficits are okay, why am I paying taxes? Right. So definitely, I don't think this will keep up, right? This can't keep up, and you see a shrink in demand. But at the same time, let's say if you are starting up a B2B business, right? I'm still pretty much maybe because this is what we are looking for largely. B2B is something that we are looking for more so than B2C, because it's very, very hard to anticipate consumer demand, which swings, very fast as compared to corporate demand. Yeah. So 2021, for sure, I think this is something that a trend. I think more VCs will also start looking at B2B startups in China, in Southeast Asia, in many regions, especially B2B startups that cater to the idea that people are working remotely. The workforce is a bit more dispersed, and they need more services to support this kind of arrangement. So, yeah, this is what I think 2021 with but we are still actively investing in 2021. I don't think we are slowing down in the regions that we are looking at. We're still very, very bullish. We think that when everyone is scared, that's when we shouldn't, because of the cycle, right? So when we invest in a seed stage company, it takes them some time to get to Series A, right? So we probably want to invest even when the market is down, because when they start looking out for Series A funding, then the market maybe has turned out again. Yeah. For Southeast Asia, I would say that maybe what my observation is, right, is that a lot of VCs are probably it's a buyer market actually. A lot of VCs are looking at okay, we have 5 startups doing the same thing.
Okay.
Now we have the option to choose which one is best, because in a good market, everyone is snapping up, right? But now they are very, very more conservative in terms of what they are looking to invest, because they need to make money for their investor ultimately. And this is the reality of things. And this will happen all the way to 2021, whereby later stage investors, you see, will be a bit more conservative in terms of what they are looking to invest. They'll probably invest in lesser companies. The number of companies to be invested will be lesser, but maybe the quantum where they invest in those lesser companies will be larger. Yeah.
Okay.
Yeah, this is just my thought, so it's not a reality. Don't think that this is like a crystal ball. This will definitely happen. Yeah.
Okay. So I think that's about it for my for you. So we move on to also very exciting topic where we open up the call for the audience. Okay. So very first question we have is we'll start with a lighter question. So how many startups have you invested in for
So sorry, how many what? Sorry.
How many startups have you invested in Singapore or Southeast Asia region?
Okay, so for Southeast Asia, right, we are currently, to be very honest, not super active as Incubate Fund. We have invested directly. We have invested in portfolio companies in Southeast Asia, in Singapore. I think 3 directly, 3. And they are Singapore companies based in Singapore, not just incorporated in Singapore. So, but with our indirect wise, with our sister fund, definitely more. Definitely way more. In total, our portfolio companies are in Southeast Asia under our umbrella probably 30.
Right.
In total, 30 of them. And our Singapore portfolio companies actually have done pretty well actually, but very, very, very underground. We don't advertise and we don't advertise them. Yeah, so they are gaming related actually. Yeah, or one gaming related and also marketplace. Yeah.
Right. Okay. So the next question is, what is your exit strategy or criteria for the startup?
Our exit strategy, right? really depends from area to region to region. In Japan, IPO will be our primary value driver, definitely. Something very interesting, right? I think a lot of people don't know, right, is that Japan, right, has about 40 or 50, around 50 on average a year of startups that go IPO on the Japan Mothers Board. This is something that a lot of people don't know, actually. So everyone is like, like Japan is actually a black box in terms of what they're doing. So even like during times like this, right, there are still startups that actually are going IPO, and they're still doing quite well. For example, last December, one of our portfolio company went IPO, and during COVID period, right, their share price jumped 2.5 times. That made them become by valuation, a unicorn actually. But then they are not a unicorn, because during private stage, they are actually not a $1 billion company. But after it went IPO, right, the market actually believed in them, and their share price rally, and they actually went beyond a $1 billion valuation. So primarily, we are always looking for IPO in Japan. Hopefully, our portfolio companies, and with other regions like Southeast Asia. To be very honest, right, M&A, M&A would definitely be something that we look for, because the thing is that honestly, you look at people saying IPO, right? But you have to look at the strength of the exchange, right? Whether there's any volume and things like that, any strength of the exchange. So and also very interesting fact to share, right, is that a lot of people think that Japan, they have a Mothers Board. So Mothers Board is where it's high growth company where they go get listed. And a lot of people think that, oh yeah, it's mostly domestic investor, which is not true, because nearly half are foreign investors. Yeah, so this is something that, it's something food for thought, right? The thing is that, of course, we look at Singapore exchange, right? Not doing so well now, honestly. But we look at Vietnamese exchange and Thai exchange. They're definitely doing growing. But at the same time, what is the percentage of like for foreign investors in those markets, right? Investing in the public companies in those exchanges. So if it's a robust market for IPO, if it's not, then it's very hard for me to tell you whether whether IPO will be the market to go. Even now, right, it's very hard for us to gauge. The last publicly announced exit in Southeast Asia is what Incubate acquired Trade Gecko. So it's B2B, right? B2B company. So I think this would definitely happen. More B2B company, would get acquired in Southeast Asia. For India, it's the same thing. A lot of M&A, and of course, there's actually an opportunity to IPO because the India exchange is actually pretty strong too. And for US, the same thing, right? We definitely hope that our portfolio companies can become a public company. If that's their ambition, we don't push our founders, say, okay, this is what we're looking for. You should do this. It's not very fair. So this is the exit strategy that we are looking for, and the criteria wise on what startup that we invest in varies very, very differently from startup to startup. But because as an early stage company, I think the one way to gauge is a business model. How they approach the business model, how they think about the business model, and whether they have, they know anything about what they're doing or not, or it's just, someone say, okay, we're gonna work hard and do this. It's very, very different for someone who have experience and say that, okay, we know how to do this. So because at early stage investment, there's only so much resource they have. Of course, they can make mistakes, but we want to minimize mistake, right?
Okay, interesting. Okay, we still have time for one more question. Right, this is a little more specific. So does Incubate fund invest in AI sector with the focus on electric utility / energy sector in China market and followed by US? And also how can they reach out to you?
Okay, interesting. Very interesting question. Yes, we do invest in electric utility energy sector. in Japan actually. We have an example of that. We invested in the startups doing that. China, no. Unfortunately, we don't invest in China. I think China, we don't have anyone there. So and it's a very, very, very tough market for outsiders to go in, you know, especially it's a very mature market now. So it's very tough. US wise, focus in electricity. Yes, I mean, like, why not? US, we may look at it. Anyway, reach out to me is through email. You know, any other channel, you know, it's a bit hard. In my LinkedIn, right? My LinkedIn, I put my summary, right? Is that don't LinkedIn message me. I put my email in my LinkedIn account. Please email me. Don't LinkedIn message me. And the number of LinkedIn messages I actually receive is phenomenal. So I'm like, okay, these people don't read, don't bother reading.
Yeah, that's
This
true.
is very, very strange. Yeah, so I'm like, please don't send me via LinkedIn messages because I don't check LinkedIn often, right? So unfortunately, those who message me via LinkedIn get very rarely replies or no replies at all. Yeah. So best way is still Incubate, Dave at incubate.com. Yeah.
Right. Thanks for that. I think that's all the time we have for today. Right. So for all the questions that we didn't manage to answer, right, please feel free to reach out to me by email. Okay, just on the email. Okay. But thanks, Dave. I think for both the audience and I learned something about you today, and I hope you enjoy yourself as well.
Yeah, I do. I did.
Yeah.
Thank you very much.
Thank you. And this has been very highly engaging. So once again, right, we also want to share that Incubate is one of the the active investors that is ongoing startup investors for the E7 Pro members. Right. So remember, there are other values that can be added for your company, such as the ecosystem, right? The priority listing as well as cost savings that your company can do, right? So do check out the membership and reach out to us if you have any questions. Stay tuned for an email after this webinar because we have a surprise coming your way. Okay. So next week we'll be meeting with Martin from Deep Right. So make sure you also register for that webinar. We'll also send to you a feedback form after this. So this is very important for us. Let us know how we can improve the content and bring more value to the audience. Okay. And I think that's about it for today. Thank you so much, Dave, for being here with us, and thank you everyone for tuning in for this amazing show.
Thank you, Han. Thank you, everyone. Stay safe. Health is the most important thing we can have. So stay safe.
All right.
Thank you.
Right,
Bye. Take care. Bye.
Oh, this is here.